Hey everyone, welcome to my channel and welcome back to my subscribers. I am making this video today because I am really mad when it comes to the attitude of some gold experts out there on the internet. Because I get the impression there are a lot of experts making videos for YouTube and putting content out on Twitter who think that the only gold worth stacking is 1 ounce gold coins. Now, for some people, buying a 1 ounce coin might not be a problem. But for some other people, buying a 1 ounce gold coin simply might not be an option. And the idea that buying 1 ounce coins is the only way to stack metals is why so many people have a lot of silver and not enough exposure to gold. And in some cases, no exposure to gold at all. So I am here to set the record straight about fractional gold, having exposure to gold in general, as well as show you how I pick the fractional gold pieces that I add to my stack. Just before we get started, a quick reminder, this is not financial advice, and please take a moment right now to hit the like button if you think this content is important and that it should reach more people out there. It's your way of telling YouTube what you think matters. So, as it stands today, you can see here a list of the world's largest assets, excluding real estate and excluding bonds. And gold remains king, being nearly 5 times larger than its closest rival, that being the Apple Corporation. All the while, silver remains in a wrestling match with Amazon for the 6th position, but now has some significant space between it and Tesla, which has come down quite a bit with the broader market pullback. Now, the first lesson I want everyone to take from this list is the larger the market cap, the less volatile the asset is in theory. And how this applies to metals is very important. Because gold has such a high value in market cap compared to silver, in percentage terms, it's easier for silver to increase or decrease in price. Think of it like this. If you own an ounce of gold and an ounce of silver today, in order for the price to double, you need twice the amount of money chasing the same amount of metal. So for the price of silver to double, you would need an additional $1 trillion chasing silver, whereas you would need 10 times that amount to double the price of gold. And that's why, from a speculative point of view, the price of silver can run up much quicker than gold in percentage terms, because every dollar has a 10 times higher impact to the price of silver than it does to the price of gold. And that's what has attracted a lot of people to silver. Apart from the affordable price, the hope for a huge upside. And although I think silver is a great thing to own, I have talked about it ad nauseum on this channel, the truth is that the size of gold with respect to its total value, total market cap, although it might not offer as much speculative upside, it means that the downside on it, when there is high selling pressure, it means that the price won't come down, at least in percentage terms, as much as it would, for example, on silver. And we've seen that play out this year when the total value of gold was just above $12 trillion. It's lost more than $1 trillion in total market cap, so the amount of market cap that it's lost is actually more than the entire market cap of silver. But it's still not far off from where we started the year, as you can see here. Sure, we're down 9%, right around the level I said would likely be the bottom for gold in 2022. But versus silver, which is down 21% so far, and the S&P 500, which is down 25%, it's actually outperformed the market at large. And this is why, as I have illustrated in past videos, gold is a better hedge against inflation and a better store of wealth versus silver. So for those of you out there who have been hesitant to buy gold because of some reasoning that buying anything less than a full ounce just doesn't make sense, I want to show you how I select my gold, my fractional gold pieces in case you're on a budget. But before that, I offer this up as food for thought. Being protected for the future means being properly diversified. Being properly diversified means being ready for multiple outcomes. Not necessarily all outcomes, but simply the most likely outcomes. Not just cash and one other thing, like the end of the financial system, which is kind of a trend I see in a lot of online silver-related forums and pages. It also means having a little bit positioned in case the current system we're in continues, and being positioned for new technologies to grow, as well as being prepared for disaster too. Here's a tweet I recently did summarizing my exact position on diversification. In it, I said, being diversified doesn't mean owning 10,000 different things, 95% of which are probably crap. Being diversified is owning a few really good assets from each asset class. And you can see I added the hashtags gold, silver, Bitcoin, Amazon, Google, real estate. And it's no coincidence that I led off my hashtags with gold, because diversifying into metals absolutely means having a bit of gold apart from having a stack of silver. So because I regularly invest, I use the dollar cost average strategy when I'm purchasing metals, both silver and gold. I have spoken about it also countless times on this channel. My budget for metals varies from month to month or from quarter to quarter. Sometimes I have more to invest, sometimes I have less to invest. So sometimes I buy full ounces and sometimes I buy fractional pieces. And before I buy fractional pieces, I put together a little bit of analysis, and this is what it looks like. This is a price comparison to show how much I am paying as a premium above spot and what price level gold has to reach in order for me to break even on the dollars I am using to purchase the gold. All of the prices you see here have been taken freshly from APMEX, and what I would do first is establish my budget. Once I've established my budget, I figure out where I would get the most bang for my buck, which is actually indicated by the percentage above spot premium data here in this column. Then I ask myself, while looking at the price to break even, does this make sense? Is the price to get there actually realistic? And this is kind of my sanity check to make sure that I'm not paying too much to get something just because I want to add to my stack. As it stands right now, I am avoiding anything above the $2,000 per ounce level. And that means for the options that we're looking at right here on this table, the quarter ounce maple leaf likely makes the most sense to me. By using this strategy, I am able to responsibly build my stack as well as diversify the type of gold I have within it. Because the day may come when I may need a little bit of money and I might not want to sell a full ounce of gold in order to get it. And if that day comes, thanks to my fractional pieces, I know I will be able to quickly find a buyer because fractional pieces are extremely liquid, usually very easy to sell, as well as I will be able to part with as much or as little gold as I actually need to, meaning that my overall stack will remain more or less intact. And on that topic, here are a couple fractional gold pieces I recently purchased here in Dubai. The first piece is a 10-gram coin minted here in Dubai by Emirates Gold, celebrating the holiday of Eid. I know that this piece in particular may be harder to sell internationally due to the fact that it is not a recognizable coin like a maple leaf or a Krugerrand, which is what I usually like to buy. But I got it because I liked the design and was able to get it at only 8% above the spot price, which means I only need gold to be around $1,775 per ounce for it to be worth what I paid at spot price. The second piece I want to show you is something I admittedly bought just for this video to let stackers know that even if you have a humble budget, it is possible to add gold to your balance sheet. This is a 1-gram piece of gold, And Pomp Suisse is probably the most well-known producer of such mini bars, but this one here is locally produced also by Emirates Gold. And you can buy 1 gram bars just like this from APMEX as well. I paid about $67 for this one, which gives a price of $2,100 per ounce to break even, so a bit on the high side. I wouldn't normally buy something like this, but I wanted people to be aware of their options, so I especially bought it to show in this video. And what I want to say while showing you this, and here you can see it also in comparison to the gold maple leaf, which I've also pulled out to compare with respect to size, is that, again, if you are responsibly analyzing the products that you're purchasing, looking at the price, being careful of not paying too much premium above spot, you are able to actually find pretty good deals in the fractional gold market. And again, as I said, it's an affordable way to responsibly add to your stack, and it will provide you a lot of flexibility within your stack should you want to part with some little bits of it just in case the price runs up and maybe you need cash at a particular moment. You don't have to liquidate full ounces. You can just liquidate small pieces of your stack according to your needs. That's it for this video. Thank you all for watching. Please let me know what you thought about this content in the comments section. Your feedback is very important to me, and I would love to hear your opinions on stacking fractional gold. Do you think it makes sense? Do you have any fractional gold? Are you against it? Let us know in the comments section. As I said, your comments are very important to the community and to educating people out there who are also watching this video and reading the comments. As always, I wish you all the best, and I do hope to see you in the next one. Until then, goodbye.